Hi, this is James Shug at Westpac with the end of day report for Wednesday, July the 18th. It was a positive day on equity markets after a bit of a shaky start. A range of stories driving markets. In the UK, we had the Bank of England minutes come out. These are to the July meeting, where the asset purchase program was increased by 50 billion. Showed a 7-2 vote in support of that. Two dissenters argued that the special measures that the Bank of England and Treasury announced at the Mansion House speech back in June, whereby banks could access cheap funding as long as they lent the money to households or businesses, that might be sufficient, at least for the time being. The minutes did also show, though, that there was some discussion about the possibility that those measures might make it possible at some point down the track maybe to cut the bank rate further. It's currently at 0.5%. It's been there since 2009, and that was seen as the effective low point or zero rate for UK rates. But there's some discussion in the minutes about maybe being able to cut that further. The UK jobs numbers continue to surprise. In the latest 3 months, that's to May, we saw a 181,000 rise in employment on top of a 53,000 rise back in December to February. Now, that period of time coincides with the recession, the reported recession up until March, and the recession that we think continued into the second quarter. Now, the issue there is, what do you believe? Do you believe the weak business surveys and the weak GDP numbers, or do you look at the strong jobs numbers as a better guide to the economy? The other issue there is that the Olympics, the Jubilee, shifting public holidays and really weird weather patterns also does tend to cause a range of data distortions, and maybe that's a factor at play in the apparent discrepancy between those figures. In the US, we saw housing starts up 7% in June, but permits down 4%. Basically, both sets of numbers were exacerbated or exaggerated by the multiples component, but single family starts rose for the 4th month running and single family permits for the 3rd month running. So more evidence there that the housing market, although still running at a very low level of activity, it does seem to have found a bit of a base and may even be accelerating a little bit. Fed Chair Bernanke delivered his testimony that he gave yesterday again today to the House. The Q&A has been underway, but nothing really fresh there in terms of insight about imminent policy shifts from the FOMC. We also had Treasury Secretary Geithner acknowledge that the economy is definitely slower, but he denied that it was heading into recession. A disappointing or a concerned outlook from Intel too in their latest results. We get the Fed's beige book regional assessment of the US economy in a couple of hours' time. But where we stand at the moment, after all that, just heading into the European close, the London market up 0.9%, the French market up 1.6%, the German market up 1.5%, the Spanish market just managing a 0.2% gain. And by the way, the Spanish 10-year bond yields have risen to 6.9%, ahead of Spanish government issuance, which takes place tomorrow. And the Italian market up 0.2% as well. And the Dow up 0.64% at 12,887. Tech stocks did well, up more than 1%, despite that Intel concern, and that's meant that the broader S&P 500's up 0.45 of 1%. In commodity markets, we've got gold prices down 0.7% today at $1,578 an ounce. Copper prices up 1/3%, and oil's up about 0.5% at $89.64 a barrel. The Aussie dollar's climbed a bit, with equity markets doing okay, 1.035 against the US dollar, compared to just above 1.03 yesterday. We've got our friends at the NAB putting out their latest business survey, and that's about it for me today. Back again tomorrow.